In progress.
Hey, what's good, YouTube? This is Chris the Goat, back with another video. So today I'll just be going through like a quick few setups, real quick, you feel me? Um, I should have done this on Sunday, but you know, life happens and stuff. So this is just about like, you know, the trades I've been going through and basically watching since last week. So this will be the update video of all the setups that I made. Um, cool. So we're definitely gonna start off with Euro CHF. This is the daily time frame. So um, it's just a basic structure of a ascending structure where you have your 1, 2, 3 touch formation on the resistance. So basically with this one, let's quickly go to the 4 hour time frame so we can see everything in detail. So um, everything is basically simple. It's just this setup is just a structure based off these touches here on the resistance. So it's 3 touches. Remember, the third touch has the highest probability. So our focus was around this point. And as you can see, I also posted like these setups on the Instagram page, Chris dot the goat underscore setups. Um, I posted these like about last week. The trade was around these areas right here. Let me just highlight the part I'm talking about. So around these areas right here. So as you can see, we had just a quick structure that formed in the hourly time frame. So remember, the market repeats itself. As you can see, we have some form of like a 1, 2, 3 structure on the resistance here as well, which gives you like a double top formation. So we had our 1, 2, 3 touch formation right there, and then the price rejected to the downside, and that's when we had. I thought this was gonna be like the correction of this movement or impulse to the downside, but then as you can see, we had um, such a huge formation. It took a bit of time. I just didn't update it, but as you can see, it's a correction to the downside, and the price is probably still gonna go down. But you can see you really need to be patient. So that's Euro CHF. We're just gonna move on from that one. And what do we have here? GBP against USD. So this was um, quite similar, but it was a bullish setup. We had a huge down movement here structurally. So you can see um, it's roughly the same. So we also have our 1, 2, 3 touch structure, right? It's the same concept. The market keeps repeating itself. So people really should be patient because the market will always move in such a similar manner. So you really need to point out those um, common setups. So you need to familiarize yourself with these simple setups because um, once you can spot these type of setups, it's quite easy. So you can see the third touch had the highest probability. We had a rejection to the upside, followed by a very nice correction right there. Uh, some a bullish correction. So let me just scale down to a 4-hour time frame so you can see what I'm really talking about. Remember, the market repeats itself. The market will always give you something that you've seen before. So you can see with this correction, we have one, two, three touches, and then what happened after the third touch, which has the highest probability, the market literally shot up. Let me just show you. From that point, you can see we moved a huge margin to the upside right after the highest probability, which was on the third touch of the correction. So it was literally an impulse followed by a correction and continuation, which was another impulse. So just remember, the market always repeats itself. And you can also see something similar in the smallest time frame. So probably 1 hour time frame. Let's go. So I can show you those similar movements. So well, it kind of happened too in like the hourly time frame. So you can see we have a similar fashioned structure, so which was an impulse and a correction to the upside. So same thing here. So the market will always repeat itself. So you really need to identify these simple formations. So with this trade, um, I can say this was like a successful trade because it really went uh, over 60% of the structure, which is fine because you can see now the market is just forming a huge sideways movement, which is probably a correction for continuation to the upside or the downside. So right now it's just a matter of watching what the market does. But with that trade, I can say we can move on from this one. So onto the next setup. New Zealand dollar against the Canadian dollar. Scale up to the daily time frame. Okay. So as you can see, it's similar to the previous setup. Downwards movement, um, and a huge impulse to our upside. Now we have this uh, corrective movement that's happening right here. So I also haven't updated this one, so we can see it's forming such a huge correction right there. Uh, Post this huge impulse. So this one still has to form, and you can see we have a bit of like a um, canvas going on right there. Inverse head and shoulders going on right there. So let's just give this one a bit more time to form. So let's move on. That was GBP against Canadian dollar. And now we have the Australian dollar against the Japanese yen. Um, so this one is quite interesting. So this is the daily time frame, which is going to scale down to the 4-hour time frame. Like, as you can see, this showcases the 1, 2, 3 touch uh, structure. So you can see we have this resistance over here, right? It's somewhat like uh, a double top, right? So let me just get rid of this. Okay, fine. We have this resistance over here. You can consider it as a double touch or whatever. double top, I mean. So just look how the structure got to the second top, right? Structurally, this has three touches on the resistance, right? It's one, two, three touches. So the market will always stay consistent. It always repeats itself. Remember, the third touch of a structure always has the highest probability. So you are much safer waiting for the third uh, touch on your structure, whether you're trading uh, a bullish market or bearish market. So in this case, you can see this is our third touch of the structure. So let's focus within that point. So let's just scale down to, let's start off with 2 hours. So this is interesting. The third touch, just look at how the price actually got to the third touch from right there. You can see once it reached the third touch, it started moving correctively. And what do you notice with this correction to the third touch? You have three touches once again, right? So there's just so much confluence um, that signals you to move to the downside because the price really rejected from this point, and you really need to consider how it got there. It got there correctively. So remember, every like after every correction, you either have an impulse, whether it's a bullish one or a bearish one. So in this case, it's bearish because it's resisting from this level here, which is probably like a double top or some form of a double top, right? And you have confluence of this 1, 2, 3 touch structure. As you can see, it's a ascending structure where on the third touch the price got there correctively and it rejected to the downside. So now the price is going to the downside. And I probably posted this setup on the Instagram page where we have competitions. We post setups frequently, real lifetime signals, and yeah, you could have had this trade because I posted it while it was like still around this area right here. Um, so basically that means you can literally follow the way we trade through the Instagram page because we literally uh make these setups and then post them immediately. So those are real time signals that you can take and trade along. So there was AUD JPY, it's bullish, and I gave you my reasons for why I see that as a bullish market right now. Okay, this is similar to the previous one uh, in so many ways. So the previous one was literally this type of market, right? Because why am I saying this? Is because we have like a double top right there. Let me just remove this. We have this double top right here, and how the price got to the second top, got there correctively, and you had your rejection on the third touch, which has the highest probability, and you can see the price just went down from that point. And we had such a deep retest, but then you can still see we was still in within like the good was still within like good territory, but then the price plunged down right after that, and right now it's forming some type of correction. Um, yeah, and I also posted this on the Instagram page, so if you're interested in that, you can follow that on Chris dot the goat underscore setups. So that is my view on USD CAD. But then right now, I'm not really interested in analyzing the sideways movement and making trades based off that. So I'm just gonna let this one uh, just form out and see where the market really goes. Okay. This is gold, and this is actually interesting. Um, the reason why I'm saying this is interesting is because, okay, cool, we had a descending structure, right? And then a breakout with like a huge impulse, some type of corrections happened within these areas, and then a huge impulse to the upside. So right now we're having like the market rejected for some reason right here, right? So we need to establish the reason why the price rejected, and if it's literally the market turning to like a bearish market, right? So we need to sort that one out, and by doing that, we need to refer back to the previous market, right? So you can see the previous market, it marks the beginning of this descending structure, which means it's somehow a double top, right? This is our first top, and this is our second one. So uh, what we should look out for right now is probably for this impulse to go deeper and then let the market do its thing by making like corrections right there with a 1, 2, 3 touch structure on the correction to the downside. So we'll be looking out for these kind of like movements from gold this week. So you can see, just try to look out for like corrections where you have clear 1, 2, 3 touch structures, right, on the resistance to the downside. So there will be gold for this week. I haven't really watched news, so I can't really back it up with like fundamentals and give you like real life reasons of gold going down. So I don't really know, but then if it does play out like this and give us like a sweet correction right there, damn, that's gonna be so sweet, bro. So that let's wrap it up with gold. And what we have here, this is Canadian dollar against the New Zealand dollar. So um I really just focused on like the smaller time frames with this one. I didn't really wanna scale up to the daily time frame and have to like analyze all of this. But you really can if you want to. It's really simple. You can literally see this is like a ascending structure, whatever. So you had your huge impulse to the downside, a breakout right here, and this is basically like the correction. So this is where we're gonna base off our trades. Let's go to for our time frames and see what we really had here and the trading opportunities that we took in the past weeks. So you can see we had a similar structure, but within the smaller time frame. So I'm just gonna go to the 2 hour time frame so you can really see what has transpired with this one. So we had similar fashion structures where you have your 1, 2, 3 touch on the resistance, because this is a ascending structure. So an ascending structure, chances of having a breakout to the downside are much higher than it just continue going up. And the opposite goes for a descending structure. So I'm gonna draw the same illustration so you guys can visualize it. So descending structure, right, in that manner, it has if it does break out, it has higher chances of it going bullish than just continuing going downside to a downside. But it does happen where you get uh, a structure, a descending structure, for an example, where it just keeps trickling down to the downside. So that's the reason why you need to wait for a clear impulse to the upside, showing a turn in the market, followed by a correction and a continuation. So you really need to wait for those because you might get kicked out with such structures that just keep going down or keep going up, and that like they just don't turn. So you need to really wait for the market to turn to tell you like, okay, cool. Uh, Here's a clear impulse. Here's a clear correction. Dude, we're about to make a move. So yeah, you can do that. Fine. So let me show you where this one had that impulse and correction. So after the third touch, remember highest probability point, we had a perfect impulse to the downside. That's one confirmation that the price is probably gonna go down rather than up. Fine, after the impulse to the downside, we had this sweet, I repeat, sweet correction to a downside. So as you can see, um, we had 1, 2, 3 touches. But if you guys can't really see touches, let me just go to the 1 hour time frame. So you can see this is a clear touch first, clear touch second, clear touch third. And just look at what happened after the third touch. A huge movement to the downside, right? That's like 2.27 percent, which is huge. You could have capitalized off that. As you can see, the price really reached about 60 to 70% of this overall structure, and that is good enough. You don't really need to reach 90% because in most cases that's really not realistic. So there was Canadian dollar, New Zealand past weeks, because right now it's just doing weird things, going sideways. So it's really not a great time to be looking at this and trying to come up with trades within that point. So we're gonna move on and look at Euro GBP. So this one once again is simple. I'm not gonna scale up to daily time frames or the 4 hour time frame because this is really simple, really simple. I didn't even need to like look at the daily time frame structure. So it's literally an impulse, so upside correction, which means there's going to be a continuation if you get the 1, 2, 3 touch formation on the correction where it rejects as well upside. So that was the good trade, the quick trade to capitalize off this buy. So you can see you had this touch right here. We'll consider this as one, and then the third one right there. And after the third touch, we had a rejection right there to the upside. And yeah, you can put your stop loss at the third touch where it turned, so about that point. And that was literally a simple trade. So we're gonna move on from that one. This one, similar fashion, but with an additional structure. So you can see that's really similar because it's literally an impulse from that point. Uh, okay, sorry, just hold on. Just hold on, baby. Yeah, cool. We're just gonna add the video right here, but yeah, those are successful. That was a good week. Yeah, so like recording the video. Yeah. Yeah, but I'm done though. Uh, recording.